This is good news as you go towards the end of your tenure. Finally, the profitability has risen for the first time in almost 3 years. So it's not often we get to say this to many CEOs. What went right for you in the quarter, Joe?
I feel really good about the quarter. You know, all divisions contributed to the growth. So our innovative medicines divisions, we've got a couple of new drugs that are firing on all cylinders and generating good growth. Our generics business, despite competitive and pricing pressures in the U.S., also grew on a constant currency basis. But I think the best part about the quarter was that our Alcon business grew sales 7% and profit almost 20%. So I feel really good about where we are as a company. We're positioned as a focused company and with a very strong pipeline for the future.
So Alcon, let's talk a little bit about that. Good morning to you, Joe. Must be very uncertain times for people working there, not knowing exactly where this business is going to head. What's the new bar for you for Alcon? So if it achieves X, we keep it. If it doesn't achieve that, then it goes. I appreciate it'll be somebody else's decision by 2019, but what's the current thinking?
Well, what we announced this morning is that the strategic review is well underway and that we've made a lot of progress recasting the strategic plan for Alcon, and we confirmed that this business should be able to grow top line at or above market rates, as well as profitability that's in line with the sector. And I think you're starting to see that. In the last couple of quarters, the business has turned, is starting to generate some nice growth. Now, at the same time, in the near term, it will benefit from continuing on that path. So when I think about all of our Alcon associates, they're working very hard to return that business to sustainable growth. And that's why we said, look, no decision has been made today, but the strategic review also said that if the business continues to perform well, that a capital markets exit of that business where we created a separate standalone company would add considerable shareholder value. So we've done things like looked at tax structuring, carve out financials, where we would incorporate. A lot of work has already gone into that, but we haven't made a decision yet. In the near term, we're really focused on getting multiple quarters of sales growth and operating income growth so that if we do decide on a spinoff of this business, Alcon will come to market from a position of strength.
So if you get a fair wind and the next CEO gets a fair wind by 2019, to get it to the bandwidth that we understand from you is $25 to $35 billion. Given everything that you've just leveled out there, continuing quarterly sales growth, a fair wind with market value, etc., sector profitability, what is the possibility of getting it towards $35 billion, Joe? People are going to be disappointed it's going to take another 18 months. Let's give them some value in terms of the valuation. Where can we take that to?
Well, you know, a year ago when I talked about the 25 to 35, I was really talking about in the medical devices sector, there are very few assets that are in that range. So I didn't directly link it to a valuation on Alcon. I said, look, because of scarcity of assets, it could be that shareholders swarm towards a business like this because of scarcity of assets in that size. And if you look historically, over medical devices that have been spun out from pharmaceutical companies, there has been considerable shareholder value created because of that. Now, as you can imagine, as we continue to grow Alcon under Novartis ownership, that value is only going to increase. And that's because as you saw in the third quarter, we're increasing our sales growth, we're increasing our margin, and that's what we need to see. We need to see multiple quarters of this business continuing to perform well before we make a final decision. And if we were to decide on capital markets, it would definitely come to market from a position of strength and with I think, a good valuation.
OK, so, and Joe, on another subject, you talked about U.S. pricing pressure for generics. It's something that many in the sector have talked about. What are you assuming from here onwards on that front? Do you assume that pricing pressure stays the same, intensifies, or eases a little?
We expect the pricing pressure in the U.S. to stay the same. We do not expect it to ease, because if you look at the fundamental factors that are driving that, you've got a lot of actors in the supply chain that have consolidated, that have a considerable amount of pricing power in that supply chain. So in the short term, we're focusing our Sandoz generics business on our differentiated generics, like biosimilars, things that are difficult to make, difficult to replicate, that have some level of pricing insulation. And you saw in the third quarter that we've been successful in this. We only have about 30% of our business in the U.S., 70% is outside the U.S., and that business is growing strong. It's doing well. Sandoz was actually able this quarter to show
Joe,
gross
thank you very much for joining Anna and I. Unfortunately, time has run against you. We wish you well in your future. The CEO of Novartis from Basel in Switzerland.